And again, I was muted. God damn it. What? Okay, let's redo all this thing again. The good thing is we have time. I was saying the market has a spike to the downside. Opening inside the spike is neutral, opening below the spike is negative, opening above the spike is positive. We have this 3-day balance here. 1, 2, 3, perfect balance. Day inside day and day inside day. Back to back inside days here. If the market opens below this pullback low, notice that this pullback low is the same level, the same pullback low that we have the day on Wednesday. Right? Opening down here kind of rejects all this movement that the market had. In the late, you can see the movement. This movement is going to the upside. The market is going to the upside. Notice how value is slightly overlapping to lower. Okay, value, the market is going lower here, even though price is higher, but market is going lower because you can see. And if you don't like the expression or the fact the market is going lower, no, you can see here POC. POC is the same. Halfback is the same. So you can also say the market didn't change, but you can say the market is going higher. I mean, because of value. Now this is news events, right? News events can be. It could have been a bad number as well. Because of this movement, I could say that the number, the non-farm payrolls was very good because of the magnitude of the break, and the market is very sensitive to those pieces of news because it will give the Fed more room to keep rising higher, to keep rising rates, or to keep them high for longer. How much is this number? Now, unemployment rate 3.8, 3.8. Consensus 3.7, forecast 3.8, 3.8. Was it? Come on, that wasn't. I thought it was better than that. Now, let's check the bond market. I am paying a lot of attention to the bond market because the ES is trading off the bond market. We have yesterday, if you can see this, look at this day. What this looks like. What this day looks like, right? What this day looks like. Short covering, right? Short covering weakens the market. Now, the bonds are super short, man. This is a daily chart. This is super short. Super short. 1 day of short covering, it doesn't repair anything here. It needs more than 1 day, but so far, oh, look at this. Today, I was checking this. It made a new low here it didn't make a new low, okay? I was paying attention also to this bond market. The ES is the same for the ES as well. Make a new lows, but in the overnight session, okay? If anything serious will come out of this, more likely the market will make a low in the regular trading hours, not in the overnight. The 30 years bonds, the 30 notes have already made a low in the regular trading hours. Now, look at what's happening in the years in the market. Trending lower, the market is building its way inside this range. It's still in the upper side of this range. I guess the most important thing may come out of this, right? Notice that this is 7% pullback from this high, and this is 10. Right here, how much the market? 63. Yeah, around this area. This is kind of like about 8, 8, 9, 8.8, 8, a little bit more than 8 here, right? I'm starting to think, okay, if we got 8 or maybe 9, what will happen with bigger time frame participants of this market if they will start to feel the pressure to sell. And the thing is, when the market comes closer to this area, the lower it goes, the higher the odds. Right? The higher the odds, the bigger time frame capital will sell. And I think, I'm still thinking about the pain trade. If this is the culmination, okay, this is the last part of the pain trade. Now, the weekly is still in this 42.26. Is 60 is around this area. The weekly is still in between these two ranges, right? It seems like it's building value here. I don't know what's going to happen, but if the market comes back up here in this range, it can go all the way up to here, and if it comes back below, because there is nothing here. I can see there's no ranges, nothing all the way up to here. This break is absolutely weak, right? And look below, we have a range here. We have 3, 6, 8 or 9 week range here that can be used as a support here. This is a stair step. The market can break into this range and can trace sideways here just because of this. Notice that is what happened in the daily time frame, right? When the market was up here, what do we have below? There was nothing here that can offer support to this market, to this break. And down here we have just a tiny micro range, 4-day range, but this range is acting as a support, like a step, as acting as a support for this market. And this market is trading back and forth on this area. It happens to be also the space between these two ranges. But what do we have below? Right? Notice what we have above. Nothing here. There is nothing here that can offer resistance to any kind of movement or short cover rally or short squeeze or whatever. There's nothing here. And what is below? Firecracker effect potential here. Firecracker effect potential here. Nothing here. 4 lows. There's a lot of stops in this area around here. Nothing here. Nothing below. There's nothing here. Gap here. Nothing. There's nothing below that can offer support to any kind of break if the market takes or gets back inside, takes out this range, it gets back inside this range, it gets back inside, inside this the deeper inside the bulk of the 30-month range as well. There's nothing all the way down to here. There's a 3,800 all the way down to here. And the monthly has, multiple lows. I'm not saying the market is going to break. Okay? I'm not saying that. I'm just checking what do we have below. This super weak. We knew that. We were talking about this for a long time. But the upper side is the same. Right? It's just the same. There was time when we talk about how this market was I thought that there is no bigger participants here in this market. There's a lot of cash in the sidelines. And this is just very short time frame traders here. the market is going from long short covering to long liquidation, short covering, long liquidation. Just 2 3 weeks ago, the economy was so good. There wasn't going to be hard landing. That there is this, that we're going to the moon. And just a couple days, just a couple weeks after that, everything is bad, right? There is going to be a recession. This, that. Don't pay too much attention to that. It pays to be aware of those things, but if we kind of let um, get carried away by those comments or those news, we will lose perspective, and that's a dangerous thing. That's very dangerous. It can hurt us. Now, these kind of days tend to attract a lot of traders. Okay, there's a lot of trading. I am paying special attention to the bond market, what the bond market does. Now, the bond market has the potential to form, to be a long liquidation day. Can this market notice now where the market is? This is a big pullback to halfback almost. But the most important thing here for me is that the market's back inside the 3-day range just before the opening. All right. I'm aware that this low, this is overnight low. This is the low that the market made in the overnight a couple days ago. Okay? And try to remain calm, try to remain neutral, and just watch what the market does. Okay, though I am not trying to anticipate anything here. I'm not trying the market. I'm not saying the market is going to go is going to break, so I am going to be short. The market is going to rally. I am going to be long. That kind of thinking is very dangerous. That can lead to, Now notice this. I still this is kind of I don't like that way how this break. There's nothing here. There's huge volume here, but I don't see bigger things here. And the market, this is a big pullback. And let's see the spike, we have this spike. The market comes back inside. All right. You will see that this low here is the base of this spike, okay? Of the overnight spike. What the market does relative to this spike, where it is open. All right, I'm going to prepare myself a cup of coffee, and I'll be back soon. Be careful out there. All right, the market is open. The market opened inside previous day range. The market opened inside the balance. The market is still inside balance. All of that spike. Notice where this pullback low is, God. That can be good. All right. This upside moment is very weak, man. Now we have, well, overnight inventory is very short, okay? Overnight inventory is very short, but, okay? Notice where this thing is. Do you remember from yesterday, what do we have here? Two lows. The overnight doesn't repair this weak levels, okay? It has to be made in the regular trading house. And doesn't do it because of volume. Overnight volume is not that much. Let's see if the market can take. Remember where the base of the spike is? Is down here. Okay, the beginning is here. Alright. All this movement, where it started? It started right there. Let's put it there. Let's put it there. I have this one here. This is this is also the base of the spike, the distribution close. Nothing has changed relative to yesterday. But traders, my price can carry you away, carry us away. This low is no good. Overnight inventory is super short, very short. There can be some rebalancing overnight inventory here going on. I'm eating my breakfast here. I don't have too much interest in this market now. It was going to be one thing if the market opens here below, and it's another thing when the market opens inside the range. You know, market size inside range, these lows, market keeps building weak lows. What's happening with the bond market? Keep an eye on the bond market as well. Some rebalancing of the lows. Do you remember yesterday? The market has this rally at the opening, right? It has a break and then a rally, and it was sold. The first time it was sold from the 4,300. One tick from 4,300, and now it's been bought exactly from the previous pullback day. Pullback low. And this day, the pullback low, notice where it came from, POC. This one, the same pullback low. There's a weakness all over the place here. Okay, this low now has been taken, has been repaired. Now it's a better. Now it's a better. It's not a reference anymore. It's a better low now. Okay, I was doing some posts up there. I'm sorry, but the market has good arguments to go to the downside, solid arguments to go to the upside, solid arguments to try sideways. There's, the fact that the market had or gave us a spike to the downside, that doesn't repair these lows, okay? It doesn't repair this low. Now we have 3 day balance. What the market is doing? The market is trending low, right? You have this high, this lower, 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 lower. Okay? The market keeps going lower. Not for once the market has gone higher. You might see, oh, these days this is going higher. No, this day is not going higher. This is an inside day. Inside days, it's the same type of trade that we have with the 30 minutes periods. We have it here, right? We have balance. Go with the breakout of the balance, preferable in the direction of the trend. What the direction of the trend is? To the downside. The inventory is super short, though. The inventory is super short, so that guideline, you have to be very careful. You have to be very careful when using that guideline, because also what we have here, we have a spike to the downside, super short in the overnight. Breakout balance, the market can look below here. What do we have below? We have this overnight low, right? 2 times now. Twice the market has made a low in the overnight session. The same thing that happens when the market makes all-time highs in the overnight session. It doesn't mean that it cannot last, but usually most of the time, for a solid low, a good excess in the lower side, it has to happen in the regular trading hours, daytime. Now look how many lows do we have here. We have one, non-excess, little excess here, a little bit of excess. Now this low doesn't have excess. This is really close. This area is, being long here is extremely, it's almost like suicidal, But the short, okay, the short also has a risk here. The direction of the trade here, when we have market trending lower, what traders do is sell the rallies. Okay, that's what most traders will do. Sell rallies. The first indication the market was having something here is when the market opened, it opened right. It has a pullback to, it has a little tiny attempt to the downside that was bought exactly from the pullback low from this day. We talk about that. We talk about this low. And notice where that low is. It's exactly the same low. This movement to the upside, when the market does this, we have a spike to the upside here that is rejected. Higher prices are rejected. Now, we have another rally here. Another rally yesterday. The market opens below here, as taking this low. These higher prices are being rejected as well. Twice, 2 days in a row, higher prices are being rejected. Now, and value is lower. If you don't want to see this as a market going lower, you can also see POC, right? Nothing has changed. This is a perfect balance. Perfect balance. POC just right there, halfback right there. The worst thing you can say is a balance. Nothing happened. This is balance inside balance. The bigger opportunities, the best opportunities happen when the market is out of balance. The market was out of balance, but opening inside. It cannot close, the market couldn't close this distribution here. It can take the base of the spike, the overnight spike. What the heck is this? I don't know what the heck is this. Oh, this is where the selling started. Well, this spike started. It started exactly from previous period half back as well. So, very, I just don't. I post something on Twitter here. Let me check. I hope I'm seeing, and I hope it help. It was of help. And this is what I did over there. I have 10 years, the 30 years bonds making a new low. The 10 years, no, the market has been trading off of the 10. This thing here, this was the spike to the downside. Really, there was nothing here, right? Nothing here. When I don't see big blocks here, that made me question the validity of any spike actually, right? Because there's just nothing here. Unfortunately, I can see, I guess I don't know. I cannot see here. No, but this volume here. The volume that we have here is not that much. It's just the bit dry. The bit just disappearing here, and not that there was selling here. The bit just disappeared. And so far, inside balance. Market has repelled. This is not a reference anymore. We have the opening right there. What about the volume? 56, a little bit. The volume hasn't changed. Yesterday we have a really bad day regarding volume. Look at how the volume is decreasing here. It's decreasing, right? I guess that's the thing that we can get from these days. The volume is decreasing. What the market is doing? Market is balanced. There's not really, well, could say market was going lower, but it doesn't have volume. There could be some rebalancing on inventory for today's number. Okay, and the volume is starting to pick up here a little bit, but not much really, not that relevant. Okay, I am watching the weekly time frame and the fact that this market, right, when the market was down here, it was about kind of like close to the 8% mark. And now 10% pullback is, what is 10% pullback? Do I have it here? No, I better put that thing here. Let me check what it is. 10%. $41.69. 41.69 is 10%. Oh, down here, 10%. And then 7% is up here. So we have 7, 10, about 8% somewhere down here. Yeah? The closer the market gets to this area here, this is when the bigger time frame participants, bigger time frame capital can start feel the pressure, right? Because the market is breaking, right? You can see, for example, let me pull these charts. You can see the market is going lower, right? Market is going lower. Now we have money. Just imagine you being, because hedge funds, all those bigger capital money, they don't trade their money. They don't invest their money. They invest somebody else's money. If they have customers that see the market going lower and see the capital, shrinking, they will start calling the managers, right? Start, what are you doing, right? Why you haven't sold? Why are you expecting the market to come all the way down to here to sell, for example? Right? As long as the market trades around this area at 7%, back and forth, there's still not that, And that part, that kind of thinking, that kind of, or that piece of information could be relevant here when the market comes through this area or to this area. Notice that there's nothing below. We talk about this, what is below and above as well. There's nothing there. Come on, man. Look at this. Come on. How lucky. This is crazy, man. This is crazy. There is nothing here today. Oh, the fact that the market breaks here, you know, I am just talking about a potential scenario. One scenario here, right? When the bigger capital start to sell here in this area, there will can be some acceleration here, right? In this bigger time frame, right? Grasping that idea, right? That can happen is hard for traders, like us, because we tend to think, oh, this market is too low. The market has to bounce, and the market has gone too much far, right? Far low, far down. That now it's time to break, and traders keep buying, and that keeps fueling the break as well. Not just bigger time frame money selling, but also the very short time frame trading participants buying and being forced out each time. Right? Now also we have this another scenario that's happening here. We have rates rising, potential rise a little bit more, potential for staying longer for more time. All right, which is exerting some pressure, a lot of pressure on the banks as well. Just check your daily time frame trade charts in the bond market. Just can you imagine what's happening here, right, with this bond hold? If they can hold their notes to until they are due to maturity, they will be okay. But shorter, small banks, small companies cannot do that. And right now there's a lot of money, there's a lot of unrealized gains in the bond market. The bond holders here. What happens if these participants or these entities need the money? If they start to need the money, they will be forced to sell at a huge losses. So that can be something that can have an impact also. Wow, look at this. The way how we look at these charts is the same way for all kind of markets. Notice what happened with crude oil also. What happened is this level here, mechanical selling here, perfect trend to the upside, nothing here to this, holding this market here. The market can come all the way down to here. Here it has a little bit of support here. There's nothing here. It has something here, and this is even better here in this area here, because there's a range. Higher dollars is good for bigger for tech. I was surprised of the gold actually. What the gold is doing. This is supposed to be a hedge, right? But the gold has nothing all the way down to here as well, to the 1800s basically. All right. Now another week low here. Can you see what's happening here? Who sells from Halbach? Who sells from? How can I do something here? I can't. The risk for me is really high here. If I decide to buy, if I decide to be a buyer, or if I decide to be a seller, the risk is, my position has high risk. I'm not willing to take that kind of risk here. Also, notice what this high is. Halbach, POC, exactly POC, man. Now back-to-back mechanical lows. If this market breaks, there's could be good odds that this can have some short covering here. No, I mean, being long or being short is a decision that you take, and also you can be flat, right? And I don't like my odds here. Really, I don't. This low is no good. This is very weak here. Very weak. It was weak before, now it's exponentially weak. Exponentially weak. Exponentially weak. Exponentially weak. Low now. This level here. It's very bad. And something that I have from yesterday. I was doing my homework yesterday and I noticed something. Let's see if I can show you. If I join the days from the 29th, no, for the last 5-6 days, we have this. We have this accumulation down here. A little bit. The low. It seems this make me think that the low has not been put yet. It's not there yet. It has more. There's no excess here in the lower side, and the lower also was made in the overnight session here. Another thing I have noticed is when I put the last, it was 3. I mean the same thing, but in just volume. Just the histograms. There's a lot of volume in this area. This is 70,000-80,000 volume. The 789 here in the low side. You can see that is, the lower it goes, there's volume coming down here below this break. And it just dries here in the lower side. Okay, this low has been taken, has been repaired. Unfortunately, I don't have access to options now. This would be a good market for options. Maybe you can have your options here. All right. This one has been taken. I'm not interested in this one. This level also has been repaired. Technically, now we have this one. This is continuation here. Monitoring for continuation, we see the market taking this low out. Next thing, there's no gap here. Next thing, overnight low, and Mondays. This is Tuesday or Wednesdays, overnight low as well. The bond market is kind of like having some, starting to form a long liquidation shape. The market is still inside balance now. It's taking each, you have yesterday's area out, next the 2-day balance out, next continuation we see the market taking the 3-day range low out. All right. Um, Unless there's any questions asked, guess I am going to call it a day. You know. Please let me know if you have any questions, any comments. What do you think? What you would like to see? This is what the bond market is doing. You know, we have a new low in the 30 years notes, but the 10-year note hasn't taken this low yet, the overnight low. You know, look at this, how this range is compressing here, compressing here, and the market has been trading off of this chart, basically has been trading over. You could the last this week you could have placed your trades following the bond market. You know, there was a lag between the bond market and ES, maybe like 1 to 2 periods. You could trade off of this. I don't like these highs, I don't like these lows. There could be some rally here and then a break. This is super short as well. All of this, look at what happened here yesterday. Short covering here, right? I hope you have seen this today or yesterday. And now we have a long liquidation here. It doesn't have when the market starts to see or to pay attention to these markets, other markets, is usually when the market when there are like extremes, are either too high or making new highs, or making new lows. Gold is far from the highs. Crude oil is coming back. It was high, was really high. Dollar is what the dollar is doing. The rally the dollar is having is actually really good for the market, because it favors the big tech companies, the bigger companies, and the big tech in our carries this carry market. No, look at this tremendous pullback, a tremendous rally that this market this is having, you know. Also, yesterday I started to notice something. I started to notice is the trading here was crazy, some kind of crazy. Look at these highs here, for example. This is very weak. Same thing here. You know, it was trading in anticipation to what the market, what these markets were going to do. I mean, we never know. Well, we never know what is going to happen. But it worked really nice yesterday. You know, and that's the risk, right? We never know when we try to up from the market. My worst days, my biggest losses came when I had tried to anticipate the movement. Now we have this movement, right? Coming from exactly POC, exactly to the tick. The next thing, market comes exactly from half back. or a hardback. Now it's bought from this low. Notice this big rally here, where the market, and what towards what's the direction, or what is aiming, or where the market is being sold from, hardback again. And also, who are in this market the odds that the bigger force or the dominant force in this market are the shortest time frame traders, or the shortest time frame traders of all, are really high here. And those traders are also the weaker. The shorter the time frame, the weakest. Those are the weaker the hands. All right. I'll see you. I hope you have a wonderful day. Stay safe out there. This is not good. This is not good. This is not good. The market is inside the spike. It's as neutral as it can be. It's inside the overnight spike. The market is inside the range. It's extending the range. This looks, if you have a wider, or if you have a panoramic view of the market, this is starting to look like a big short, like a big V shape here, characteristic of long liquidation rather than more serious selling here. Look at this. You start from this day, and I have a big. It's a little bit elongated though. If I use the daily, it's a little bit elongated, good, but it's truncated in the lower side. The market is in between this range. You have a big range here, a big range on the lower side. Market's right there. The bigger time frame, the monthly, the biggest time frame is remains trending lower, trending lower, trending lower. 6 days. Any change will be seen first in the daily time frame. All right. Okay, guys. Now it's 10:20. I wish you a good rest of the day. Stay safe. See you another day. Have a wonderful weekend. Enjoy your weekend. Bye-bye.